So we're here with Zeke Chansey,
Hi.
AMC Mortgage, Vice President of Sales. Vice President.
Wow, that's big time, right?
A couple steps below president.
Right.
I mean, I gave
Yeah.
myself a title as president a long time ago.
Yes.
It was purely tax related.
You didn't say vice president of what? The United States or what?
Vice President of Sales,
Of?
AMC Mortgage.
Okay, there we go.
I said all of that.
Did you say that?
I did.
Okay,
He doesn't hear very well. That's okay.
this camera.
He doesn't hear very well.
We're off to a good start.
You can use all that. It's a podcast. It's okay.
Okay.
Anyways, we're going to talk about mortgages.
Mortgages.
It's so exciting.
Wow.
Interest
know.
rates.
It's
Get you
almost as
grab
fun
a cup
as
of
insurance.
coffee. It's going to be a lot of fun here.
Whoop, whoop, whoop.
It's
Well,
keeping a lot of people from buying, from selling.
It's definitely a topic. So it's kind of fun sometimes to walk into a social event and you start saying what you're doing. And the last couple of years has always been a little difficult because they want to pin you down and get exactly.
It's an icebreaker,
what,
isn't
yeah.
it?
When are rates going to change?
Yeah.
What are they going to do about
We're
it?
going to get 2%
Yeah.
good.
Like you know exactly, right?
Yeah, and I'm like, hey, maybe I'll just have another vodka cranberry. We don't need to talk about all this
Yeah,
stuff, right?
I know. Well,
Yeah.
the elephant in the room, when you're around too,
Yeah.
people are going to ask these questions. And you and I both know it's not always just about the interest rate.
Right.
There are other things that go into your home mortgage.
Yeah.
Or getting prepared to get pre-qualified for a home mortgage. So,
Well, so interest, like we have said many times, interest rate is something the public knows, right? They know there's a number, so it's an easy question for them to ask, when really that may be the only question that they know to ask. Usually, if someone's grabbing me at a social party, it's just because, hey, maybe I want to put my house up on the market, or maybe we want to move. But most people that call in really trying to buy a home, they want to know, how much is this going to cost me?
right.
What's my monthly payment? What's the out-of-pocket expense?
That's my bottom line.
Yeah, all they know to ask is what are rates,
Right.
right? Just to kind of get it going. So
And
sometimes you have
rate-
to dig a little deeper.
Rates go up and down. I mean, who influences or what influences the interest rate?
Yeah.
Don't
Why
say
do they
Donald Trump.
fluctuate
We don't
up
want
and
to talk
down?
about the
No
president.
politics.
No, but,
Yeah, sure.
but sometimes it is
Yeah.
politics,
Yeah, yeah.
right? Somebody speaks a word and
Especially right now when the public is looking for something to grab onto, it's kind of increasing the ebb and flow, maybe unnecessarily a little bit. But the easiest answer, what influences interest rate, are the Treasury bill, so the 10-year Treasury bill. And then the market at Fannie and Freddie package mortgages up and they sell them. So then that demand that those investors want are added onto that Treasury bill, and then what lenders will add on for their revenue. So those are the three main factors that folks. So the Treasury bills can be influenced by Fed's policies or something positive or negative in the market, and then the investors piece, really what's where we're at today, why rates are where they are today, is because rates shot up after historic lows. They shot up. Well, now all these people that were tasked with purchasing these mortgage-backed securities are like, well, someone's going to refinance in 6 months or a year because that's what we all thought. So why would I want to take a risk and buy that unless I can get some good money for my return? So they increase their spread for their want, and that's why rates are kind of artificially higher than they should be. Long story short. So,
Okay.
but are rates actually high or just perceived to be high?
well, really the interest rate, if it was just interest rates, you could see all the graphs everyone's put on social media. Well, in 1983 they were whatever, right? So
Yeah.
but the combination of the factor are the cost of living super high, home values, or what I mean.
Right.
Yeah, in '83, our average house was $50,000.
Exactly.
Right? So that's a hard thing to equate, and for people just to say, well, it's not that. It's probably shortchanging the actual problem that
So
people
it's a
have.
combination of a
Yeah.
lot of things. And
They're
when
just-
you have higher rates,
They're just like, I got to write a check each month. Can
Right.
will the bank support that check when it gets cashed, or is it gonna bounce?
You had mentioned the 80s, and one of our first
Yeah.
house was like 14, 15%.
It really was.
Yeah.
And the shocker, people were still buying houses,
Yeah.
right?
Oh,
But
yeah.
the price
They
of
had
our
to.
house was low.
Right, it was a lot lower.
So-
Now your
there's-
wages
to your
were low
point.
too. I mean,
Yeah.
it's all relatively
Yes.
relative.
It is.
A lot of wages have increased, and a lot of wages really haven't. And so the barrier to entry is tough for people. Meaning, for people to buy that first home or that first time in their family generation, that's still a little tough.
Right.
There's programs out there for down payment assistance and all those things, but it's still. I mean, I'm sure you guys have been to the grocery store in the last 2 years.
Last 2 weeks?
Every time. And I have a family, there's 6 of us, right?
Right.
There's 4 kids.
Yeah.
Literally every time I'm scanning stuff, I'm like, okay, here's the number. It's gonna hurt.
It's gonna be
hurt.
a lot.
And then every time I walk out, like, this is ridiculous. I'm like, well, I've been saying it every weekend for 3 years, right?
Yeah.
And at some point,
Not
I should-
doing this anymore.
I should get used to this, but I don't.
Yeah.
No. No. One thing I was going to mention, though, okay, the prices of houses when we first bought our first house, I think it was $85,000. I'm dead serious. I mean, that kind of
My
ages.
first was in
that
the
dates me
40s,
a little bit.
so.
Yours was in the,
1940s.
how old are you?
Nice one.
What's going on?
Yeah.
But things, cost of living is higher.
Yeah.
Now we live in Oklahoma, so I'm getting to the
Sure.
what do we call that? The meat of it. We live in Oklahoma. The prices of homes here are a lot lower
Yeah.
than most of the country. Thank,
Especially in coastal
thank
areas.
God.
Yeah.
Right.
Yes. So you were talking about first-time home buyers. I love working with first-time home buyers. It's the most exciting
Sure.
thing ever. And usually I can get them qualified.
Yeah.
Usually this is not a problem because of where we live. Now, I'm from Southern California. I have cousins and aunts, uncles, their kids. Trying to buy their first home is horrible.
I can imagine.
So difficult. It's so difficult. And so, the nice thing is we live in this middle part of the country that, they don't pay us in sunshine like Southern California, but you can buy a house.
Yeah, there's affordability still there.
Yes.
And it's just different. And part of anything is just people getting used to this new piece, right? I mean, you guys drive around on a Friday, Saturday, every restaurant in town is packed with
I know.
people, right? So that's usually the discussion. Well, we can sacrifice a couple nights out or whatever to make some things
True.
miss. Ultimately, there's no replacement for the wealth that people can gather by buying a home, right? I mean, our appreciation go up. I'm sure that's probably one of the questions about what happens when rates do go down, right? Well, then the demand's going to go back up. It's going to keep pushing values higher. So it's Michelle, in your office last week, there was some data that came, Michael showed about the average sales price in the winter versus summer. And
That was an interesting graph because the average price of a home, let's say this is January, and by the way, it's like minus 20 degrees here in Tulsa today. Just kidding.
She embellishes. Go ahead.
But realtors don't do that. And but you buy a house today, and it might cost more 6 months from now, just because it's June, it's July, it's warmer out. There's more demand. There's, you know what I mean?
Like
It's just-
Zeke was saying, if rates go down,
Right.
That's either
then
gonna-
prices will probably
well,
go up.
the
then, right?
stat was the last 3 years, on average, we'll say 16% difference in average sales price between December and June. Part of that too, though, is
That's
you guys know,
huge.
it's a huge number. So even
Yeah.
if rates drop, the affordability changes and demand changes. And I also understand, maybe where you want to move, you need to wait till the kids are closer to getting out of school. I mean, so there's so many factors that go into.
People say it to me all the
Yeah,
time.
I mean,
and
I get it.
I hate that answer because then that means we have so many houses on the market all at the same
Yeah.
time. If people would just shift their thinking
Sure.
a little bit to more like I say February. I've always said February.
Being the start of the purchase business.
Start of the purchase business or the start of getting your house ready to sell.
Yeah.
Because you never understand how much work it might be if you've been in a house a really long time to get that house ready to sell.
That's a great point. Every time I walk through, so just being in this, and every time I walk through the house, I'm like, well, I'd have to paint that drawer and have to do that. And I'm not even wanting to sell my house, but that's just how the mind works
Yeah.
a little bit too. It's like, well, we'd have a lot of work to do before we could sell
Deferred
this.
maintenance.
Yeah.
You got to keep up on that.
Yeah.
So many people are on the fence right now. Are buyers making a mistake if they're just waiting for rates to drop?
Well, no, I don't think so. Now, some have to buy what they want, right? Which, again,
Sure.
it's going to be a double-edged sword probably. They got their heart fixed, and then they come in now, they have a bidding war. But, what we talk about is there's always an opportunity to refinance. And I'll include almost every lender in town has offered some sort of really reduced fee or refinance to purchase now, again, to help kind of stimulate some things.
Right.
But the break even on some of these, if a rate drops 1%, so let's say, let's use even numbers, let's say 6.5 today and you can refinance in the fall for 5.5. Well, the time to recoup whatever closing costs add you would have with your payment difference usually is about a 6-month break even. So you could theoretically refinance once a year for the next so on and still benefit.
Right.
So get in there now, get into this situation, find out that you're comfortable with it, get that house, and pick up the appreciation. I mean, let's just say hypothetically, say all things are equal with what Michael said. If you told me today I can get a 16% return on my money in 6 months, why wouldn't you do
Yeah,
that?
right.
Why wouldn't you want to do that? And,
Right.
And you guys have been in this market for a long time, and especially with Tulsa, it's nice. We're not going to get rich on our values. We're not going to, the entry is there, but it's consistent. We're always
Right.
gaining appreciation. And
Right. Well, at least we are now. I feel like Tulsa in the last 5 years, we have definitely seen a shift.
Oh, sure.
In appreciation. Thank the Lord.
Thanks to COVID, right?
Thanks to COVID.
Yeah.
But it's true. So how would an interest rate actually, people don't understand all of this, affect their monthly payment?
Sure.
Okay.
So they're basically, depends on how much down payment. We'll say there's 4 factors of your payment. Your principal and interest, which is just to pay the loan back, which the interest rate affects that 100%. Your term, 30-year, 20-year, 15-year. Then you have the property taxes and the property insurance, and then mortgage insurance if you don't have 20% down conventional. So we've all heard plenty of stuff about property insurance, right?
Yeah, lately.
The AG's involved, the state's involved, the nation's involved. And Oklahoma is, I think, usually we're 1 or 2 in the highest highest insured states in the nation. Because we got everything from, we used to have earthquakes,
Yeah.
tornadoes, hail, right, wind, fire. We got the whole gamut of
Right.
natural disasters.
Right.
And then your property taxes with demand did kind of raise property taxes quite a bit
It did,
through
yeah.
that. So the interest rate, how much you borrow, how much you're paying on that money, and then how long are the main things with your payment. But it's only a small factor.
Right.
So there's also options to look at maybe buying your mortgage insurance out. If you're looking for a reduction in payment, you can buy it in a one lump sum, be done with it, so it's not there monthly. And then if you put 20% down, you don't have to escrow the tax and insurance. You can pay those on your own. And some people use credit card points or whatever to pay some of those things. So if you can also reduce your monthly obligation just by maybe increasing your down payment or paying out your mortgage insurance and not having to pay the tax and insurance. Because there's a lot of people that are bonused or quarterly or yearly,
Sure.
so they want their monthly a little bit more tight, so then they can't afford a couple times a year to pay some lump sums
Yeah.
or pay their taxes that
Yeah,
way.
good information. I
How
love
much
that.
does credit score affect?
Quite a bit. That's risk, right? So if people are lending a large amount of money to someone, they want to see, have they performed on that historically? Have they paid their debts back historically? So the 2 main factors really, I'd say with credit and then your program. So a conventional versus maybe an FHA or a VA, where the true government-backed loans maybe don't have the same criteria for credit scores. You can, there may be reasons why Michelle may get an offer for a conventional, and then maybe a couple days later they switch it to an FHA, and like, well, what's happening?
What's going on?
Why are they bad now
Yeah.
or whatever?
Right.
And maybe it's not the case. Maybe they're putting 10% down and they're trying to decide which is the best option for them.
Right.
FHA does seem to be kind of getting back into a little bit more popularity. It was definitely pushed aside during COVID when,
What's the top you can borrow on FHA right now?
oh my gosh, you would ask me that.
I think it's 415, 4
No, well, it went to 5. I think it's 524.
Is it that high now?
Yeah, 526.
How much I know?
100%. We should edit this before it comes out. So a majority of people, especially in the entry level, can still utilize that 3.5% down payment and get a really good rate. They were in the 5s as of last week. So
Do you still find people who purchase big ticket items during the escrow process, and
It happens.
it does happen. It's funny
they buy a
'cause-
car
Woo,
when
buy
they
a car.
shouldn't buy a car?
well, I think it's
Yeah.
on everyone's signature lines of their email in the industry. Like I'll see other emails from other people that work at different companies that still says the same stuff. Like, don't quit your job. Don't go buy stuff. Like,
Yeah.
save the money you have in your account.
Right.
And I get it too. I mean, people get excited. Like, oh, I saw
I
that.
got a new refrigerator.
I got that. Yeah, they were running 18 months, same as cash at Lowe's. So
Yeah.
I went and bought it.
Never going to show up. I mean, computers,
Yeah,
whatever.
yeah.
Well, back in the day, let's just say way before all the computers, you could go and do whatever. Just don't tell you.
Yeah, just keep mom. Mom was the word.
Well, can't do that anymore.
Yeah.
So be careful. Don't buy anything.
What would you say is the one takeaway people need to know about interest rates?
It's part of what's important to you, right? I'm not kidding. If I told you the interest rate was 1,000%, but your monthly payment was $1,200, the 1,000% would have went out of your mind, right? And so again, back to that, it's a conversation piece, but ultimately, what does my payment look like? What's my obligation? How much can I come out of pocket? Because let's just say we even have, now we're starting to see where people are opting to increase their interest rate a little bit, and then using that profit or extra revenue, the lender can pay for closing costs.
Right.
So I'm always a big fan. You can find $100 a month if you needed to make your payment difference.
Exactly.
It's hard to find 10 grand.
Right.
Right. So if you can keep some money in your pocket for whatever,
Right.
get through this time, we know at some point, whatever this table's made of, rates are going to fall. And they're starting to fall over the last fourth quarter. And maybe there's some stuff we'll talk about, some things we see in the future that'll help rates drop. But find what works for you. What can you be comfortable with? from a monthly obligation, and then also making sure your nest egg that you saved up is there just in case something were to happen.
I always ask the couple, what are you comfortable with in your monthly payment? I don't even talk about the interest rate
Yeah.
because that is the ultimate goal, to make sure that they aren't going to be underwater.
Yeah.
So you could be qualified for a $3,000 a month payment. But if you're not comfortable with that, you know that you like to go skiing
Sure.
in Vail and Telluride, and personally,
You're
I
talking
love
about
to
yourself.
do that.
Yeah.
Buy a smaller house then, right?
Yeah.
Wah, wah.
Yeah, I mean, and that's so true. Is because some people are like, what if I put an extra $10,000 down? Well, rates are still low enough, and our values are still low enough. That doesn't move the needle that much. It would be much smarter. Let's shop the insurance. Let's make sure we have the taxes are correct. Let's buy out that mortgage insurance. Let's pay instead of that. Let's pay off that $9,000 car you have left. That's $500 a month, right? Let's some of those
Sure.
things ultimately, because
Yeah.
ultimately, at the end of the day, no one's really getting too bent out of shape on each check they write. It's what's left at the bottom. And so if we can reorganize some of their debts, maybe that makes a lot more sense.
Right.
But it takes time, right? And you have to, as a consumer, I encourage you to invest that time to talk to whoever you borrow money from or whoever's there. Does it make sense for me to maybe move this money elsewhere? Or the stock market's at all-time high.
Right.
Put that extra 50 grand in the stock market and gain some revenue for the next year. And then when rates fall, maybe you can apply it at that
Makes
point.
money off
Yeah,
of that.
yeah.
Get pre-qualified.
Get pre-qualified.
If you don't do anything else, even before you, please come to my open houses. But
Next, number 2 thing to do.
yeah, but if you go, and it's scary sometimes, they can call you on the phone. They don't even have to come in here and get
Yeah.
pre-qualified. You can call somebody, you can get pre-qualified over the phone. Then you kind of have a guideline
Sure.
of where you're going to be at, so that you're not going to disappoint your wife. If your wife's like looking at $1 million houses, but you really are only qualified for a $600,000 house or a $300,000 house or a $150,000 house, you better get your ass pre-qualified.
And that's the piece. A lot of people can be
Preach it.
can be qualified for much more than they want to spend too. That's the bigger piece, right? Is like, yeah, you can be qualified for it. Do you want to write
you want that
Do you
payment?
want that check every
yeah,
month?
yeah, true. So that's pretty good,
Yeah,
right?
that's good.
That's good.
Thanks very much.
Well, if I
Good
could add
info.
one more thing about
Yeah,
this, not to make it political.
Yeah.
But about a week and a half ago, the Trump administration said they were going to use some of the cash reserve that Fannie and Freddie have compiled over the last 15 years to buy mortgage bonds, which is basically what the Fed was doing. So $200 billion. There's guesses either going to go for 4 or 20 months at $10 billion a month, or 10 months for $20 billion. But that will probably, just on that'll help lower that spread about 1/4 to 0.5% to the actual rate.
Right.
So, not to be whatever. We hear a bunch of stuff, and sometimes it doesn't ever come to fruition.
Right.
But this one is truly just cash that Fannie and Freddie have in their savings account.
Let's
So,
take it.
Right?
Spend it.
Use it. There's
Right.
only
Make it rain.
there's only 2 entities in the
Yeah.
government that make money: Fannie and Freddie, and then the stockbrokers for the politicians.
Yeah.
You probably cut that
You
out.
want to go there?
We could go on forever.
politics.
We could go on forever.
On that note,
I like
I've
it.
been saving that joke
Yeah,
forever.
I like it. I
Thank you,
like
Zeke.
it.
Yeah, thank you so much.